York Region posted a 4.6% increase in the average home price for the month of October. But here's the truth. Prices did not rise because the market strengthened. They rose because the market pulled back. Sales were almost flat at 1.7%, but new listings dropped nearly 14% for the month. The imbalance created what I call a phantom price rise, a number that looks stronger than the reality beneath it. Let me show you what really happened and what it means for your next move. York Region recorded 1,050 sales for the month of October, an increase, 1.7% increase from September, at an average sale price of 1.23 million, which was up 4.6% month over month. At first, it appears to be a price momentum, but once you break down the numbers, the story actually shifts. Sales were essentially flat at 1.7%. That uptick isn't demand. What actually changed was supply. New listings dropped from 3,515 to 3,027. That's a 13.9% decline month over month. That one change pushed the sales to new listing ratio from 29.4% to 34.7%, a 6-point increase. So the improvement in the sales to new listing ratio wasn't driven by stronger demand. It was driven by fewer sellers entering the market or even staying on the market. If listing volume had stayed at September's levels, the sales to new listing ratio would have remained in the high 20s, and we would have probably seen a downward pressure on price, not a 4.6% increase in price. That is why I call it a phantom price rise. It didn't come from new buying power. It comes from sellers stepping back rather than pricing to what the market is wanting. If you are a current seller or thinking about selling, you want to make sure you're not one of the 70% of homeowners waiting for that phantom price rise to normalize. I have broken down the exact 3-pillar framework the top 3% of sellers use to secure full value. It breaks down in pricing, substance, and marketing, all in a free guide. You can download the 30% Club Strategy Guide in the link below. Now let's look at how this played out locally. When you break down October's numbers community by community, you can see something that most people overlook. York Region has 2 different markets operating in the same price band. So if we look at segment 1, let's call it the 407 corridor. That would be Markham, Richmond Hill, and Vaughan. Detached homes here ranged from 1.3 to 1.35 million. This corridor behaved like a steady, functional market. It was predictable negotiation, consistent movement, and enough turnover to support pricing. Not hot, not fast, but stable. Whereas in segment 2, your York North, that's Aurora, Newmarket, and East Gwillimbury, these communities were almost in the exact same price band, roughly 1.1 to 1.3 million, but the behavior was really different. The turnover slowed. More properties crossed that 21-day threshold. Buyers gained a lot more leverage, and negotiation widened for the buyer. So a little insight. The same price band, 2 different types of conditions. Where listings moved, prices held. Where listings slowed, and leverage grew. In October, homes in the 407 corridor held fairly solid footing. In the York North segment, it offered some of the clearest negotiation opportunities we've seen in a long time in the region. I want to look at days on market in what I call a penalty curve. To me, is the most important behavioral trend that I saw in the month of October. Here's how pricing played out based on days on market. Homes that were listed 0 to 7 days sold pretty close to full value, 98% to full. Listings that were on the market from 8 to 21 days had normal negotiations. Most had conditions. Listings that were on 22 plus days, they entered what I call the penalty curve. This is where buyers assessed and assumed something was wrong. Once the listing crossed that 21-day threshold, buyers assume either a price issue, a condition concern, or a value mismatch. And the offers reflect it. You saw significant value changes after the 22-day period. Basically, this penalty curve shaped the entire month's stats. I always love to look at what the buyer and seller advantage is. And for this month, I feel for buyers. Anything that that sits past 21 days is fair game for negotiation. Longer sitting inventory tells you exactly where the negotiation window is. This is where buyers had leverage in October and where that leverage will likely stay into early winter. For sellers, they have one path to full value. They must join the 30% club because 70% of sellers last month did not achieve full market value. The top 30%, the ones who sold closest to list, all had two things in common. They had accurate pricing on day one and they had documented substance. That means a pre-listing inspection, clarity on repairs, upfront answers to any buyer concerns. When you combine accurate pricing with substance advantage, you bypass the penalty curve and you move while other listings stall. So what should we watch next as we finish the last of 2025? There are three numbers I'm watching closely. One is new listings. If new listings stay below 3,200 across the region, I believe the phantom price rise will continue. If they climb back up over 3,500, I'm considering pricing will normalize quickly. The other thing I'm going to be watching is days on market. October's pivot point was 21 days. If that stretches towards 22 days, buyers' confidence is weakening. If it stretches towards 28 days and beyond, then for sure buyer confidence has weakened. Demand is starting to stabilize. And the third item that I'm watching is the differential between the 407 corridor versus York North. I expect the 407 corridor to remain fairly steady. It's high demand in that area. And I expect York North to continue offering negotiation room for buyers. That small gap between stability and softness is where the smartest buyers and sellers are making moves right now. If you want to know which community or price band are actually moving right now or where the best negotiation opportunities are, send me a message and I'll walk you through what the October numbers mean for your situation. If you found this breakdown helpful, please consider subscribing, liking, and especially leaving a comment. I love comments. I genuinely enjoy hearing your questions. It helps shape these reports every month. Remember, I'm just about no pressure, just clarity. Until the next, bye for now.